All right, people, what's going on? I want to talk about the Tuesday reversal and midweek reversal real quick. Tuesday reversal and midweek reversal are basically made by Forexia, and the way it works is you should understand the concept first. The concept says that market in Friday, at the end of the week, they are in some direction, right? So Monday, they create a false move and then continue their move from the Friday, which looks going up. But then Tuesday, from this high, in this case, if it's downward in the low, they will come trap people like they're continue going up and then reverse on them. Okay, Tuesday reversal can be a small reversal or can be a reversal that goes for VIX. Okay, and midweek reversal is when market reverse to create the weekly structure. Midweek reversal doesn't have to be in a specific day. It's Wednesday or Thursday. If it doesn't happen in a week, maybe it's in a macro. But notice this right here. Oh, sorry. Notice that this uptrend that being created here, you see that Tuesday reversal help it to create this trend, validate this trend, so they can actually make a signature trade and break it to form the weekly cycle. So these reversals are being used to create a trend or form the weekly cycle, complete the weekly cycle, okay? The important thing is you should not force this. You should observe for it. You should be aware. So let's look at here. What an example. So, what an example. All right. So you see if market is in a downtrend, right? And Monday forms the low. And in Tuesday, this is an Asian pair. So it moves in Asian session. They forms a W at this low. This is a 30 minutes time frame. If you go and check this part in the 15 minutes, probably it's on a small W right here too. And that's a Tuesday reversal. And you can see this was not a part of reversal who complete the trend. It's a reversal who break the trend. So it does create a new trend for the rest of the week. And this is your midweek reversal right here, basically. One second. This is basically the midweek reversal. Why? Because you had the Tuesday reversal, Wednesday, Thursday, and in Friday, they failed to break the high in here. It's basically a signature trade. They go up, form an M formation, drop the price, but the uptrend is powerful that they continue going back up. Remember, this is Friday and it is a trap day, and you can see it was a midweek reversal trap. So you should have managed your trade very well, and you got your 30 pip here. Okay, so it goes to the next week. We have the Monday here. So you can see we are still in this uptrend kind of. Okay. So we are still in this uptrend. So in the Monday, when market forms this high and comes down, Tuesday, they look at that. Push, push, and push. 3 push to the high. This is again 30 minutes time frame. So if you go in 15 minutes, that's a small little M of the Monday's high or previous week's high. So in this, you'll had in here, if you enter, you could have catch 63 pips. But notice, again, this Tuesday reversal was here to form this weekly structure. That's very important, very important. Okay, so now we had this Tuesday reversal, which you could have 70 pip, or you could have hold it for the rest of the week for 85 pip, but doesn't make any sense hold it for 3 days for extra 15 pip. And in Wednesday, you can see this can be count as your midweek reversal. A reversal against the main trend to create the trend. You see, to form the trend, which is in a macro, it's just a weekly structure being formed. In a more macro, it's a big uptrend. But still, the weekly structure forms. So I'm not bothering myself and you by drawing so many trend line here. We're just trying to understand the concept. Okay, so our midweek reversal and then continue the trend. Then we have the low of Monday here. So low of Monday, price came here, grabbed the orders, moved back up. So that's another 43 pip, 44 pip in here. Remember, this is a pair. I choose it because it's my favorite pair, but the ADR of this pair is 50. So when I show you a 44 pip move in this pair, I'm showing you how to get the whole ADR, you know? So this is a very obvious midweek reversal. You can see if I draw this a little more retailish, you can see at the time that this was a live, that's what people see. And that was the news. So we had our Tuesday reversal in here, okay, and market comes here, start working this high. So notice that this high was actually very powerful, didn't break it at all. So we are in a downtrend. We're seeing a powerful resistance right here. And what happens is news release. So people who sold this resistance right here, that's fine. Where is their stop loss right now? Sorry. Where is the stop loss of people who sold this resistance or selling this trend. It's 25 to 50 pip above this zone. So let's say 35 in here, for example. Oops, sorry. And let me make it like a liquidity color. And you can see it was busted by news. Notice where price came in the gap. And that's a gap fill. So you could have catch this trade without even caring about the gap or without even caring about all I explained here and just care about this gap. You know, it's about you, which one is easier for you. You want to follow the gaps, you want to follow the trends, you want to go against the trends, whatever suits you. But another, that was our Tuesday reversal, and this is our midweek reversal. It doesn't have to be in exact same direction. So new trend, new day. We move on to the next week. Monday high, that's Monday high. The Tuesday we violated here. There's a big chance that, you know, order was much higher than this. And notice also there is gap here again. Okay, so market goes right here, forms the M, and then drop for the rest of the week almost, other than this that Thursday. So forms a new trend right here, complete the weekly structure. So M formation. Oh, I hate trading. Sorry guys. So I go again, last try. Okay, M formation, and then drop in here, fail to break this low, and that is our signature trade basically playing out for this week. Or in here, you can just take this W, and this going to be your midweek reversal. It's 30 pips. It doesn't have to be always so many pips. That's funny because what you see here right now, it's almost exact as Euro USD that we had this week. You see, failed to break, induce, but at the end, they came for the liquidity in here. Another example, Monday high, Tuesday. Once you go through this, you see how unbelievably it works. Come here, grab the orders, shift against them. This shift maybe doesn't look too much to you, but it kills the account. And then Wednesday, they came back again, hit them for the fourth time, and then reverse. That just says there is two concepts in here. A, there is so much liquidity market cannot afford. If they go here, then they have to, like, so much money comes to the market that will blow everything. So they hesitate to touch that. So when they can't go higher, they go lower. So our weekly structure again here. Just make your eyes see. That's all I'm saying. And break the trend. Yeah, I don't want to make it too much. Just since you guys came and asked me about it. Hope you guys enjoy your weekend. Peace.